Question 1. Which of the following is a primary consideration when underwriting a cyber insurance policy for a company with significant exposure to third-party data breaches? A. The company's total revenue and industry type. B. The company's risk mitigation strategy and security practices. C. The company's history of general liability claims. D. The company's employee training programs and cybersecurity certifications. Answer: B. The company's risk mitigation strategy and security practices. Explanation: when underwriting a cyber insurance policy, underwriters focus heavily on a company's risk mitigation strategy and security practices such as firewalls, intrusion detection systems, encryption, and vulnerability management. The history of the company's cybersecurity practices and past breaches is a major factor in determining premium rates and coverage terms. Security practices are a strong indicator of the likelihood of a cyber incident and the potential severity of such an event. The other options, while important in some cases, are secondary considerations. Question 2, scenario-based question. Mr. Anderson, a small business owner in Idaho, has recently experienced a cyber attack that led to a significant data breach involving sensitive customer information. The breach has been reported, but his current cyber insurance policy includes an exclusion for employee negligence, which is suspected to be a contributing factor to the breach. What is the most likely outcome for Mr. Anderson in terms of coverage under his cyber insurance policy? A. The breach will be covered under the business interruption clause as it affects the company's revenue. B. Coverage will be denied based on the employee negligence exclusion in the policy. C. The breach will be covered under the data breach response clause as it involves customer data. D. The insurer will only cover the breach if the company implements an incident response plan within 48 hours. Answer: B. Coverage will be denied based on the employee negligence exclusion in the policy. Explanation: in this scenario, Mr. Anderson's policy contains an exclusion for employee negligence. This clause would likely exclude coverage for claims where the breach was caused by employee error or negligence, although the breach involves customer data and would typically trigger the data breach response coverage. Exclusions in the policy take precedence if they apply to the specific circumstances of the incident. Therefore, Mr. Anderson's coverage is most likely to be denied based on this exclusion. Option is incorrect because the business interruption coverage typically applies to financial losses caused by the interruption, not the cause of the breach. Option C is incorrect because the data breach response coverage would be negated by the employee negligence exclusion. Option D is incorrect because the insurer does not require the implementation of an incident response plan for coverage, though it is a best practice. Question 3. Which of the following emerging threats in cybersecurity presents the greatest challenge for organizations seeking cyber insurance coverage due to its unpredictable and evolving nature? A. Insider threats. B. Zero-day vulnerabilities and exploits. C. Data breaches from third-party vendors. D. Social engineering attacks targeting employees. Answer: B. Zero-day vulnerabilities and exploits. Explanation: zero-day vulnerabilities and exploits refer to newly discovered weaknesses in software or systems that are exploited before the vendor can release a fix. These threats present a significant challenge for organizations seeking cyber insurance because their unpredictable nature makes it difficult for insurers to assess and price the risk. Once a vulnerability is discovered and exploited, it could cause widespread damage before mitigation strategies can be put in place. This is in contrast to other threats like insider threats or social engineering, which, while serious, are often more predictable and can be managed with established security measures. Option quiz: insider threats, and option C, data breaches from third-party vendors, are also significant risks but tend to be more identifiable and manageable through preventive measures. Option D, social engineering attacks, is a common threat, but it is not as difficult to insure against compared to zero-day vulnerabilities. Question 4. Which of the following cybersecurity frameworks is most widely recognized for its role in establishing and maintaining a comprehensive cybersecurity risk management program within organizations? A. NIST Cybersecurity Framework. B. ISO 27001. C. The COBIT Framework. D. GDPR Guidelines. Answer A. NIST Cybersecurity Framework. Explanation: The NIST Cybersecurity Framework (CSF) is widely regarded as the most comprehensive and flexible framework for cybersecurity risk management. It is specifically designed to help organizations of all sizes understand and manage their cybersecurity risks and is used extensively across various industries, including those requiring cyber insurance. The framework's 5 core functions identify, protect, detect, respond, and recover are designed to help businesses manage and mitigate cyber risks effectively. Option B, ISO 27001, is OLO, a recognized standard but is more focused on information security management systems rather than comprehensive risk management. Option C, COBIT, is more focused on IT governance and is not as broadly applicable as the NIST framework. Option D, DDR, provides guidelines on data protection and privacy but is not a risk management framework. Question 5. Which of the following is a key difference between first-party and third-party cyber insurance claims? A. First-party claims cover damages to a business's own systems and data, while third-party claims cover damages to external parties, such as customers or business partners. B. Third-party claims cover the loss of business income, while first-party claims cover loss of data. C. First-party claims cover only financial losses from extortion, while third-party claims cover data breach costs. D. There is no difference between first-party and third-party claims in cyber insurance. Answer A. First-party claims cover damages to a business's own systems and data, while third-party claims cover damages to external parties, such as customers or business partners. Explanation. First-party cyber insurance claims generally cover damages directly suffered by the policyholder, such as costs for system restoration, data recovery, business interruption, or cyber extortion. E.g., ransomware attacks. On the other hand, third-party claims relate to damages caused to others, such as customers, clients, or business partners, typically arising from data breaches or privacy violations. Option B is incorrect because both types of claims can cover data loss, but in different contexts. First party for the insured's own data, third party for data belonging to others. Option C is incorrect because first party claims do not exclusively cover extortion. They cover broader direct losses. Option D is incorrect because there is a distinct difference between the two types of claims. Question 6. Scenario-based question. Emma is the Chief Information Officer of a large e-commerce company in Idaho. The company recently experienced a ransomware attack that temporarily halted their online services. While the company was able to restore most of its systems from backups, some customer payment data was compromised. Emma's company holds a cyber insurance policy that includes first-party coverage for business interruption and third-party coverage for data breaches. What would most likely be covered under the company's cyber insurance policy? A. Coverage for the business income lost due to the online services outage will be covered under the first-party business interruption clause. B. Coverage for the cost of restoring customer payment data will be covered under the first-party data restoration clause. C. Coverage for the data breach involving customer payment data will be covered under the third-party liability clause. D. Coverage for the ransomware attack itself will be covered under the cyber extortion clause in the policy. Answer A. Coverage for the business income lost due to the online services outage will be covered under the first-party business interruption clause. Explanation. In this scenario, the first-party coverage will apply to the business income lost due to the interruption of services, which is a typical claim under a business interruption clause. The company is unable to operate fully because of the attack, resulting in financial losses, which are generally covered by first-party business interruption coverage. Option B is incorrect because the data restoration clause would typically cover costs related to restoring data, not payment data specifically. Option C is incorrect because the breach involves the company's systems and the third-party liability clause generally covers damages to others, such as customers, rather than the company itself. Option D is incorrect because ransomware is generally covered under a separate cyber extortion clause if the company paid the ransom, but it is not directly related to the operational downtime described. Question 7. Which of the following is a key consideration when pricing premiums for a cyber insurance policy? A. The organization's size and revenue. B. The number of years the company has been in business. C. The company's physical security systems. D. The organization's history of criminal activity unrelated to cyber threats. Answer A. The organization's size and revenue. Explanation. Premiums for cyber insurance are often influenced by factors such as the organization's size and revenue, because these factors help underwriters assess the potential financial exposure in the event of a breach. Larger organizations or those with higher revenue are generally seen as having higher risks and thus may face higher premiums. Additionally, the industry in which the organization operates and its specific cybersecurity practices will also influence the premium. Option B is less relevant to premium pricing compared to the organization's size and revenue, which are directly related to the scale of potential damage from a cyber event. Option C, while important for overall security, does not directly impact premium pricing in the same way. Option D is irrelevant since a company's criminal activity history is not typically considered when pricing cyber insurance. Question 8. What is the primary purpose of a cybersecurity incident response plan in the context of cyber insurance? A. To ensure that the organization receives reimbursement for any data loss or breach. B. To demonstrate to insurers that the organization is taking appropriate steps to manage and mitigate cyber risks. C. To allow the organization to handle claims more efficiently after a cyber attack. D. To ensure compliance with legal and regulatory requirements related to cybersecurity. Answer. B. To demonstrate to insurers that the organization is taking appropriate steps to manage and mitigate cyber risks. Explanation. The primary purpose of a cybersecurity incident response plan is to demonstrate to insurers that the organization has a structured and effective approach to managing and mitigating cyber risks. Insurers often consider such plans when assessing the risk profile of an organization, and the presence of a well-defined plan can reduce premiums or result in more favorable policy terms. Option A is incorrect because the incident response plan does not directly affect reimbursement but is a preventive measure. Option C is incorrect because the plan's role is primarily preventative and procedural, not focused on claims handling. Option D is partially correct but secondary. Compliance is important, but the core purpose is risk management. Question 9. Which of the following is an example of a typical policy exclusion in cyber insurance coverage? A. Damage caused by unauthorized access to sensitive data by an employee. B. Losses resulting from a failure to implement adequate cybersecurity measures. C. Cyber incidents caused by natural disasters like floods or earthquakes. D. Claims related to social engineering fraud. Answer. B. Losses resulting from a failure to implement adequate cybersecurity measures. Explanation. Many cyber insurance policies include exclusions related to the failure of the insured organization to implement reasonable cybersecurity measures. If the organization's practices or protocols are deemed inadequate, coverage may be denied. This type of exclusion is meant to prevent claims related to poor risk management practices. Option A, while it could be a risk factor, would typically be covered if the breach were accidental. Option C is incorrect because damage from natural disasters may be excluded under standard property insurance, not cyber insurance. Option D is incorrect because many cyber policies specifically include coverage for social engineering fraud under the cyber extortion or financial fraud clauses. Question 10. Which of the following best describes the relationship between cyber insurance and traditional liability insurance? A. Cyber insurance is a subcategory of traditional liability insurance that covers similar risks related to data protection. B. Cyber insurance provides coverage for risks related to data breaches, cyber extortion, and network security, while traditional liability insurance covers physical damages to property and injuries. C. Traditional liability insurance is always sufficient to cover the costs associated with cyber incidents. D. Cyber insurance is designed to cover only third-party claims, while traditional liability insurance covers first-party claims. Answer. B. Cyber insurance provides coverage for risks related to data breaches, cyber extortion, and network security, while traditional liability insurance covers physical damages to property and injuries. Explanation. Cyber insurance and traditional liability insurance cover different aspects of a business's operations. Cyber insurance is specifically tailored to address the risks posed by cyber threats, including data breaches, cyber extortion, e.g., ransomware, and network security failures. Traditional liability insurance, on the other hand, typically covers physical damages to property injuries and other types of non-cyber-related claims. These are distinct coverage areas, and the two types of insurance should be viewed as complementary rather than overlapping. Option A is incorrect because cyber insurance is not just a subcategory, but a separate type of insurance. Option C is incorrect because traditional liability insurance does not cover cyber risks. Option D is incorrect because both types of insurance can cover first-party and third-party claims in their respective domains. Question 11. Which of the following is typically covered under cyber insurance policies? A business interruption clause. A. Loss of income due to system downtime after cyber attack. B. Legal fees incurred from defending a data breach lawsuit. C. Costs related to restoring lost or damaged data. D. Expenses associated with public relations efforts after a cyber attack. Answer A. Loss of income due to system downtime after cyber attack. Explanation. Business interruption coverage under a cyber insurance policy is designed to compensate for lost income when a company's systems or operations are disrupted due to a cyber attack, such as a ransomware attack. This coverage is particularly important for businesses that rely on their digital infrastructure for operations, such as e-commerce or financial institutions. Option B refers to coverage related to liability or legal expenses, not business interruption. Option C refers to data restoration, which falls under other parts of the policy. Option D refers to public relations costs, which are not typically covered under business interruption. Question 12. Which of the following best describes the term data breach in the context of cyber insurance? A. Unauthorized access, acquisition, or disclosure of sensitive or protected data. B. Loss of business income due to system downtime. C. The spread of malware to external systems. D. Failure to comply with industry-specific data privacy regulations. Answer A. Unauthorized access, acquisition, or disclosure of sensitive or protected data. Explanation. A data breach occurs when sensitive or protected information is accessed, acquired, or disclosed by unauthorized individuals. This can happen through various means, such as hacking, phishing attacks, or accidental exposure of data. Option B refers to business interruption, which is a separate coverage. Option C describes malware attacks, which may lead to a data breach but are not themselves classified as data breaches. Option D refers to non-compliance with data privacy laws, which could result in legal actions but are not directly related to a breach of data. Question 13. Scenario-based question. John's law firm recently experienced a cyber attack where attackers gained unauthorized access to the firm's internal network and downloaded confidential client information. Afterward, the firm's IT team worked to restore the systems and prevent future incidents. The firm's cyber insurance policy includes third-party liability coverage. What would most likely be covered by the firm's insurance policy? A. The cost of restoring the internal systems and data. B. The legal fees associated with defending against potential client lawsuits. C. The cost of public relations efforts to manage the firm's reputation. D. The cost of the ransom payment demanded by the cybercriminals. Answer. B. The legal fees associated with defending against potential client lawsuits. Explanation. Third-party liability coverage typically covers costs incurred as a result of claims from external parties, such as clients, partners, or regulatory bodies. In this scenario, the law firm would be liable for any legal costs arising from lawsuits filed by clients whose data was exposed during the attack. Option A relates to first-party coverage for system restoration. Option C would likely fall under different coverage, such as crisis management or public relations expenses. Option D is only applicable if the firm had a cyber extortion clause in its policy, which covers the ransom payment. Question 14. Which of the following is a common exclusion in most cyber insurance policies? A. Damage from malware and viruses. B. Costs related to regulatory fines for data breaches. C. Legal fees for defending against a third-party lawsuit. D. Costs of hiring cybersecurity experts to prevent future incidents. Answer. B. Costs related to regulatory fines for data breaches. Explanation. Many cyber insurance policies exclude coverage for fines or penalties resulting from non-compliance with data protection regulations, such as GDPR fines or penalties from regulatory bodies. Cyber insurance is generally not intended to cover regulatory enforcement actions, though it may cover other aspects of a data breach, such as legal fees or data restoration. Option A, C, and D would typically be covered depending on the specific policy terms, though coverage for hiring experts may be limited to certain types of incident response. Question 15. Which of the following is an example of a social engineering attack that could be covered by a cyber insurance policy? A. A hacker infiltrating a company's server and stealing sensitive client data. B. An employee being tricked into transferring money to a fraudulent account. C. A denial of service attack that causes a website to go offline. D. The loss of data due to an employee's accidental deletion of files. Answer: B. An employee being tricked into transferring money to a fraudulent account. Explanation: social engineering attacks typically involve manipulating or deceiving individuals to divulge confidential information or perform actions that benefit the attacker. In this case, an employee is tricked into transferring funds to a fraudulent account, a common form of social engineering fraud, often referred to as business email compromise (BEC). Option A refers to hacking, which would typically fall under other forms of coverage. Option C refers to a denial-of-service (DOS) attack, which may be covered under other parts of the policy. Option D refers to human error, which may not be covered by the same policies as fraud-based claims. Question 16. What is typically the primary purpose of a cyber risk assessment when purchasing cyber insurance? A. To identify vulnerabilities in the organization's cybersecurity posture and help reduce insurance premiums. B. To prove compliance with legal and regulatory requirements for data protection. C. To evaluate the company's internal policies and procedures. D. To determine the overall market price for cyber insurance policies. Answer A. To identify vulnerabilities in the organization's cybersecurity posture and help reduce insurance premiums. Explanation: a cyber risk assessment is a key part of the underwriting process. For cyber insurance, it helps identify potential vulnerabilities in an organization's cybersecurity infrastructure and practices. This allows the insurer to assess the organization's risk level and determine premiums accordingly. A robust cybersecurity posture with fewer identified vulnerabilities could result in lower premiums. Option B refers to compliance, which is important but is not the primary purpose of the risk assessment. Options C and D are less relevant in the context of pricing and underwriting cyber insurance. Question 17. Which of the following would most likely be covered under a cyber insurance policy's network security coverage? A. The cost of monitoring employee behavior on the network. B. Costs incurred due to a security vulnerability exploited by an external hacker. C. Loss of revenue due to network downtime from a distributed denial-of-service (DDoS) attack. D. Expenses for restoring physical equipment damaged in a cyber attack. Answer: B. Costs incurred due to a security vulnerability exploited by an external hacker. Explanation: network security coverage in cyber insurance policies typically covers expenses related to attacks exploiting vulnerabilities in a company's network, such as hacking, data breaches, or other cyber incidents that result in data theft or damage. Option A relates to internal monitoring and security measures not typically covered by network security clauses. Option C refers to business interruption coverage, not specifically network security. Option D involves physical damage, which would likely be covered by property insurance, not cyber insurance. Question 18. What is the primary difference between a claims-made and an occurrence policy in cyber insurance? A. A claims-made policy covers only incidents that occur while the policy is active, whereas an occurrence policy covers incidents that occur during the policy period but may be reported later. B. A claims-made policy only covers incidents that were reported after the policy expires, whereas an occurrence policy covers only incidents reported during the policy period. C. A claims-made policy covers all claims regardless of when the incident occurred, while an occurrence policy covers only incidents that occur after the policy starts. D. A claims-made policy covers only claims arising from physical damage, while an occurrence policy covers cyber incidents. Answer A. A claims-made policy covers only incidents that occur while the policy is active, whereas an occurrence policy covers incidents that occur during the policy period but may be reported later. Explanation: a claims-made policy only provides coverage for claims made during the policy period, even if the incident occurred before the policy started. In contrast, an occurrence policy covers incidents that happen during the policy period, regardless of when the claim is made. Option B is incorrect because claims-made policies cover claims made during the policy period, not after it expires. Option C is inaccurate because claims-made policies have a narrower scope than occurrence policies. Option D is incorrect because both types of policies apply to cyber incidents, not physical damage. Question 19. Which of the following is a critical component of an incident response plan that can help reduce the impact of a cyber attack? A. Ensuring employees are aware of and follow the company's social media policy. B. Having a pre-established process for communicating with customers and regulatory bodies. C. Keeping employees informed about potential career advancement opportunities. D. Enforcing strict password policies for non-technical staff. Answer: B. Having a pre-established process for communicating with customers and regulatory bodies. Explanation: a critical part of an incident response plan is having a clear, predefined communication strategy. This includes notifying customers, stakeholders, and regulatory bodies promptly to comply with legal requirements and manage reputational risks. Having this plan in place allows for a more organized and efficient response. Option A, C, and D are important for overall organizational security but do not directly address the need for a well-structured response during a cyber attack. Question 20. Which of the following could lead to a higher premium for a cyber insurance policy? A. The organization has a comprehensive data backup and disaster recovery plan in place. B. The organization conducts regular cybersecurity risk assessments. C. The organization has a history of multiple cyber incidents or claims. D. The organization uses multi-factor authentication for all employees. Answer: C. The organization has a history of multiple cyber incidents or claims. Explanation: an organization's history of cyber incidents or claims plays a significant role in determining the premium for cyber insurance. A company with a history of frequent incidents is considered a higher risk, which typically results in higher premiums. Options A, B, and D are proactive measures that could actually help reduce premiums by demonstrating the organization's commitment to cybersecurity risk management. Question 21. Which of the following best describes cyber extortion coverage in a cyber insurance policy? A. Coverage for the cost of data recovery following a cyber attack. B. Protection against threats like ransomware or threats to harm a company's operations unless a ransom is paid. C. Insurance for physical damage to IT equipment caused by a cyber attack. D. Legal expenses related to defending against third-party lawsuits following a data breach. Answer: B. Protection against threats like ransomware or threats to harm a company's operations unless a ransom is paid. Explanation: cyber extortion coverage in cyber insurance typically covers situations where a company faces extortion threats such as ransomware attacks. The cybercriminals may demand payment in exchange for restoring access to data or halting a disruptive attack. This coverage can help the company manage the cost of responding to such incidents. Option O is related to data restoration, not extortion. Option C refers to physical damage, which would be covered by property insurance. Option D addresses third-party liability, not extortion specifically. Question 22. Which of the following is most likely to be covered by cyber insurance under the first-party coverage clause? A. Legal fees incurred from defending against a lawsuit from a third party. B. The cost of paying a ransom to release encrypted data. C. Loss of revenue from downtime after cyber attack. D. The cost of restoring compromised client data. Answer: C. Loss of revenue from downtime after cyber attack. Explanation: first-party coverage in a cyber insurance policy is designed to cover losses directly experienced by the insured organization. This includes the financial impact of downtime, data breaches, or system failures caused by a cyber attack. It typically includes business interruption and data restoration costs. Option A refers to third-party coverage. Option B would fall under cyber extortion coverage. Option D refers to costs for restoring client data, which could be covered but is not directly related to business interruption. Question 23. Which of the following actions would most likely reduce a company's cyber insurance premium? A. Implementing a password management system and multi-factor authentication. B. Ignoring minor cybersecurity breaches and focusing on major incidents. C. Limiting employee access to basic cybersecurity training. D. Failing to implement regular software updates and patches. Answer A. Implementing a password management system and multi-factor authentication. Explanation: proactive cybersecurity measures such as implementing strong password management and multi-factor authentication are recognized by insurers as ways to reduce the likelihood of a breach. As a result, they can help reduce the company's cyber insurance premium. Option B and C represent negligence in security, which could increase the risk of an incident and thus raise premiums. Option D also increases risk, which could lead to higher premiums. Question 24. Which of the following is typically excluded from cyber insurance policies? A. Damage caused by a natural disaster to the company's IT infrastructure. B. Losses incurred from phishing attacks and social engineering fraud. C. Costs related to the restoration of lost or stolen data. D. Legal costs from defending against a privacy violation lawsuit. Answer A. Damage caused by a natural disaster to the company's IT infrastructure. Explanation: Most cyber insurance policies do not cover physical damage caused by natural disasters such as floods or earthquakes to IT infrastructure. These types of damages are usually covered under general property insurance. Options B, C, and D would likely be covered under cyber insurance policies, depending on the specifics of the policy and the cause of the incident. Question 25. What does network security coverage typically include under a cyber insurance policy? A. Coverage for phishing attacks targeting employees. B. Protection for the physical damage caused to servers and hardware. C. Coverage for data loss due to a server failure or corruption. D. Financial loss resulting from an external hacker gaining access to sensitive data. Answer: D. Financial loss resulting from an external hacker gaining access to sensitive data. Explanation: network security coverage is designed to cover losses related to unauthorized access to a company's network, such as hacking incidents. This can include the theft of sensitive data or intellectual property. Option A relates more to social engineering, not network security specifically. Option B would be covered by property insurance. Option C relates to first-party coverage for data loss, which is different from network security. Question 26, scenario-based question. After a major cyber attack, a company discovered that hackers had accessed sensitive financial data, which was then used to commit fraud against clients. The company has cyber insurance that includes third-party liability coverage. What is the most likely coverage the company would use? Say, coverage for costs related to restoring the company's internal network. B. Coverage for legal defense costs in case clients sue the company for the data breach. C. Coverage for business interruption caused by a system downtime. D. Coverage for the ransom payment demanded by cybercriminals. Answer: B. Coverage for legal defense costs in case clients sue the company for the data breach. Explanation: in this scenario, the company's third-party liability coverage would likely cover legal fees and any settlements if clients choose to sue the company due to the breach. This includes defending against claims related to the misuse of sensitive financial data. Option A refers to first-party coverage for network restoration. Option C refers to business interruption coverage, which is different from liability. Option D would only be applicable if the company had a specific cyber extortion clause. Question 27. What is the role of a data breach coach cyber insurance policy? A. To manage the public relations response to the data breach. B. To handle all legal actions stemming from the breach. C. To provide advice on how to prevent future breaches. D. To guide the insured through the response and recovery process after a breach. Answer: D. To guide the insured through the response and recovery process after breach. Explanation: a data breach coach is typically provided by insurers to guide companies through the critical steps following a breach. This includes advising on legal obligations, communication strategies, notification to affected parties, and best practices for managing the recovery process. Option A refers to PR management, which may be handled separately. Option B relates to legal services, but the data breach coach typically focuses on broader response management. Option C is important but not the primary focus of a data breach coach. Question 28. Which of the following would most likely be covered under cyber liability insurance? A. Physical damages to company property caused by an employee's negligence. B. Financial loss due to a breach of confidential customer data. C. Reimbursement for lost revenue due to system downtime caused by a server failure. D. Employee wages paid during the investigation of a cyber attack. Answer: B. Financial loss due to a breach of confidential customer data. Explanation: cyber liability insurance typically covers the costs associated with data breaches, including customer notification, credit monitoring, and legal fees. This type of coverage is crucial for businesses that handle sensitive customer information. Option A relates to property insurance. Option C refers to business interruption coverage, while Option D may be covered by specific policy clauses related to incident response but is not typically the focus of cyber liability insurance. Question 29. Which of the following would most likely be excluded from a cyber insurance policy? A. Damage caused by a distributed denial of service (DDoS) attack. B. Costs associated with reputational damage following a data breach. C. Losses caused by an employee stealing sensitive company data. D. Costs related to restoring personal devices of employees. Correct answer: D. Costs related to restoring personal devices of employees. Explanation. Cyber insurance typically does not cover damages or losses related to personal devices owned by employees unless they are part of the company's IT infrastructure. This type of coverage is generally limited to business-related incidents. Option A, B, and C would likely be covered depending on the policy details. A DDoS attack could fall under network security coverage. Reputational damage may be addressed under public relations coverage, and employee theft could be included under first-party or third-party liability coverage. Question 30. Which of the following is typically a feature of a business interruption clause in a cyber insurance policy? A. Reimbursement for wages paid to employees during system downtime. B. Coverage for the ransom payment demanded by cybercriminals. C. Legal defense costs for lawsuits stemming from a breach of contract. D. Coverage for the cost of public relations campaigns following an attack. Answer A. Reimbursement for wages paid to employees during system downtime. Explanation. Business interruption coverage is designed to reimburse companies for losses resulting from operational downtime caused by a cyber attack or other covered incident. This can include paying wages to employees who are unable to perform their duties due to system outages. Options B, C, and D may be covered under other parts of the policies, such as cyber extortion or liability coverage, but are not typically part of business interruption coverage.